Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Well, let's take a look at some stocks on the move today in Europe. I'm Stephen Carroll and I'm joined by Bloomberg's breaking news editor, Louise Moon. Louise, good morning. Let's start then with the big mover, Novo Nordisk. Shares down 18% this morning.
Exactly, yeah. Essentially, investors have been shocked this morning by Novo. They've forecast a very steep decline in sales. So they're expecting that sales could fall by as much as 13% this year. Analysts are saying that even the most sceptical among them didn't anticipate this big of a drop. Essentially adding to evidence of the challenges in the industry, in the obesity drug industry. There's a lot of price competition, partly under pressure from the US government to cut drug prices. There's also a lot of competition. You know, Novo have been fighting for market share with Eli Lilly in the US, their key rival. But then on top of that, there's also kind of smaller companies selling cheaper copycat versions of their obesity drugs. So there's a lot of competition as well as the price war. Novo have already been struggling, they've already been trying to turn it around. So under their CEO, he's cut jobs, he's changing management at the top, he's already and trying to instill a culture that's more kind of performance orientated. But this forecast this morning really did shock investors. The CEO was on Bloomberg TV earlier, and he did try to kind of reassure with some positivity in the long term. So he was hailing their recent launch of their pill version of their drug and saying that, you know, longer term there would be more positivity, and the focus now is on transforming and developing new products. But as I say, shocked investors, and shares are really plunging on that news, that sales forecast.
Yeah, indeed. A different story, though, from the UK specialty insurer Beazley. Its shares are up by 8.4%. Some M&A news in focus.
Indeed, they finally agreed to an offer from Zurich Insurance, so the Swiss-based insurer. So this is a sweetened offer of £8 billion, and the two sides have reached this agreement in principle. This has been a long-running saga. So this is Zurich's sixth bid over the past year. These bids were made public in January, but this is their sixth one, and the previous ones have all been rejected by Beazley for undervaluing it. So the latest price that they have agreed to now is a 60% premium to the closing price, to Beazley's closing price the day before the offer became public. As I say, that was in January. This premium is pretty unusual for a FTSE 100 company. So it's a very high premium. Analysts are saying, you know, it appears generous. So perhaps no surprise that they've now agreed to this deal. And they're saying that combined, these two companies will have $15 billion of gross written premiums. It's going to be based in the UK. And Beazley shares hit a record high. They've already been soaring since the offers and the approaches from Zurich were made public, but they soared once more again this morning. So hit a record high and also lifted the sector. So Hiscox, for example, also rose, and Zurich also rose as well on the back of this deal. So quite an exciting bit of activity. Who said insurance was boring?
Well, indeed. Insuring against excitement, some could argue. Let's talk a little bit about Carlsberg, though, as well. Their shares are higher this morning, almost 3%. That's despite a cautious outlook.
Indeed, yeah. So they've widened their operating profit outlook compared to last year. So it's expecting organic growth of 2 to 6% in 2026. And if you compare that to last year, the range was 3 to 5%. So they've widened that, essentially reflecting a cautious stance over future demand for drinks. Obviously, consumer habits are changing. People are shifting away from alcohol towards, you know, lower or no alcohol alternatives. And then on top of that, there's also kind of rising prices and consumer habits in that sense, and then dealing with tariffs. So the CEO's warned that demand for beer in the Western markets remains subdued, and he doesn't see a more positive stance for the global consumer as well. He does see some growth in the more premium ends and, as I say, in the alcohol-free category, so two different ends. And Carlsberg have already been trying to mitigate this, so they've been moving and diversifying away from beer, but widened profit outlook.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.